What's up, everyone? Guy here. Welcome to my channel, Minority Thinker. I hope you're doing well. Obviously, the market is tanking. Now, let's get to the point here, guys. If you've seen a couple of my videos, I'm talking about inflation's economic crisis. I believe it's already here and starting. But let's get to the point here. Inflation rose 8.6% in May. This was Friday. It came out Friday, and I did this video saying that before Friday, it's that inflation, if it's at the same level at April, then the market will tank. Major pullback. So that's what happened, guys. Inflation rose 8.6 in May, highest since 1981. Okay, 1981. So for the past 2 months now, it's hovering at 81, 85. It's actually going up. They were hoping it would go down, but it didn't. So it still stay at 8.6%. If you take a look at the inflation here, it's at this level here. So the 1981, the last time is this high. Right here, guys. We're in basically a double recession here. So we're at a recession. Okay, like I mentioned from previous video, you go back and look at it. Anytime you have over 6% inflation for the past 40 plus years, it's always end up in a 100% recession. So right now we're at this 1981 level in a major recession that lasted for almost 3 years, I believe, of recession in 1981. So what that means by the inflation is basically it forces the Fed to raise rate.
Mortgage rate, which was below 3% 6 months ago, has officially surged above 6% today, and then some. Let's bring in Diana Olick with all the details. Diana?
Well, Kelly, you're right. We got a 6 handle on the 30-year fix, and that's the first time we've seen that since 2008. The average rate today came in at 6.13%. That's according to Mortgage News Daily. Just a note, though, from COO Matthew Graham, who said it was very hard for him to calculate this today in his lender survey. He said lender quotes are ranging from 5.625 with big upfront costs, or so-called points, to 6.375 with no.
All right, guys, did you hear that? Today, this came out 22 minutes ago on CNBC. Rates went all the way up to 6.13. Okay, guys, and they say the last time that happened was 2000. Look, this chart here, mortgage rate 2008. Okay, and guess what happened when 2008, guys? That's when market crashed, that financial crisis. Okay. So brace yourself for what's coming, guys. So yeah, look, interest rate here. So if you look at 1981 level of the inflation right here, the mortgage rate is at 16.69%. So what I mean by that is currently at 6%, still 10% up. So if you, history of any indication, interest rate need to go up a lot to combat the high inflation. So there you have it, guys. The Fed has there's nothing they can do aside from killing the demand by raising the interest rate. Okay? And expect interest rate to shoot up rapidly because inflation rate is at a 40-year high. Okay? So if it's hovering over 6%, guys, interest rate's going to continue to go up. So expect interest rate to go up, and when it go up, crypto will crash more. As you can see today, expected is that they're going to raise rate here fairly soon, and also QT, quantitative tightening. You can see Dow Jones 2% today, S&P 3%, Nasdaq 3.6, Nick Russell 4.3. As you can see, this is the from less risky asset to more risky asset to super risky asset. So if it's any indication, Bitcoin is a leading indicator because it's the riskiest asset, okay? So 12.8%. Under 24,000 today. So inflation here that came out Friday, that's a nail in the coffin, guys. Okay? That kills it right there. I mean, it's already on a down spiral already. You know, start from here, peaked, down. You know, this is my line here that I was thinking that this is a soft landing here. But reality, it could be that right there, guys. So, soft landing, worst case scenario. Hard landing. Or crash landing, I'd say. Okay. So from my previous video, this is where the Fed went to hovering around. But if you look at the inflation, highest since 1981, you look at the what it take to kill it. It may not go up this high just because the market is basically very fragile right now. So interest rate may not peak this high, but there's still a lot to go up. It doesn't take much, in my opinion, to crash the market from this point moving forward. So that CPI came out last Friday. It's a final call right there, guys, that the Fed is going to start to QT, quantitative tightening, and increase interest rate. And we will see right here, major drop in Dow Jones, S&P. Okay. Stock market in that sense. Okay. So again, what I've been telling folks 3 weeks long before this is that cash, guys, cash will be king. You know? So go back to my video and watch it. So sit on cash. That's your only protections right now. Obviously, cash, if you listen to this video here, cash is king only a short amount of time, where cash become easy come by. So, but within the during the recession or during the liquidity crisis, cash will be king, and you can buy a lot with it. Okay. So again, guys, this is a warning. Again, the Fed has no choice. Their hand tied behind the back to raise rate because of inflation. They're forced to by the Biden administration, U.S., the White House, because people are crying hurt right now. Okay. And telltale sign is gas price. Today in Seattle area, Chevron over $6 per gallon, regular. Okay, and imagine, average person with that kind of gas prices, people are angry. and that's the reality of it. Okay, so again, do whatever you can, guys. Deleverage yourself, rid of the debt, servicing that interest, because I can see that it's going to be expensive to servicing those debt. Even the credit card is going to go up too as well. I mean, all the adjustable whatever consumer credit is going to go up in relations to the Fed rates. Okay. So get rid of the debt. That's the first thing everyone should be doing. The second part, if you want to seek opportunities, then you need to increase your liquid, increase your capital, increase your cash to buy it when it drops, when it at a discount. Okay. And also, if you have, this is not a financial advice. I'm not a financial advisor. All my videos, purpose of education, entertainment only. Okay, there's different play as well. You can actually short the market as well, but that's a riskier play. Or you can wait until the pullback and get into the real estate because it's overpriced right now. Real estate is everything is overpriced. Everything is in a bubble right now. Okay. So yeah, I mean, it's part of the cycle, guys. And smart money is where they buy at the bottom. Sell at the top, buy at the bottom. And I think the bottom will come. And that's where the smart money is going to start buying again. So for now, they're going to risk off. Okay, they're sitting on the sideline. And if you prepare, like I've been kind of telling folks, be prepared for this time. All right, that's it. I'm out.